Hi and welcome everyone, welcome to Victory Offices. We've got a special lunch and learn session here today in collaboration with Melbourne Silicon Beats because we organized an open co-working day. So welcome to Fox Hill and enjoy this session with Andrew, our special guest here from Melbourne Angel Investors Group. And if you have any questions afterwards, just come to me, Wendy, or Chad, who's just over there, and Amanda, and we'll be happy to answer all your questions.
Well, thank you very much for allowing me to come and present to you today. So what I'm going to do is just go through some slides, but more I want this forum to be a Q&A forum. So as we go through, please, if you've got any questions or you need further clarification, don't hesitate to ask. As displayed, I'm with one of the Melbourne Angel participants, and I'm going to talk to you today more about what the seed funding process is. What does it look like? How do you engage with angel networks? Not just the Melbourne Angels, but all the other angel networks, and how we're kind of different from venture capitalists. And a couple of slides later, I'll talk a little bit more about the tools that you need to have to actually tap the Melbourne Angels. And obviously, a lot of people in these conversations, we talk about valuations. So I'm not going to go into valuations. That's a whole, another day subject. I can talk about company valuations. But I'll talk a little bit about who the Melbourne Angels are. This gives you a little bit of a snapshot of the startup investment that we do out in specifically the Victorian community. So we invest in 20 plus investments per year. Investments each year in excess of $3 million. We're very proactive, so we've got very active, proactive members of about 80. We've invested in over 60 companies, and we do about 11 pitch/deal meetings each calendar year. So this is a little bit about what the numbers are, and I suppose the key thing is the companies that we've invested have created over 500 jobs here in Victoria. So for us as investment, it's all about the jobs that these investment companies are providing out to the industry. So it's all about, as I've highlighted previously, about job creation. And again, the net jobs, creation of wealth. And when we say creation of wealth, it's creation of wealth with founders and angels, which we try to, so the companies that we invest in, it's creating that win-win situation with founders. Because if the founder wins and it's got the support mechanism when dealing with angel investors, they win and we win. Because obviously our investment keeps on riding up. It's a long-term commitment. So when we say a long-term commitment, it's an alignment. It's really where with entities between, probably the 5 to 7 year is where we try to that's where we potentially could be exiting. It could happen beforehand, but it doesn't really happen after 7 years is kind of the maximum time that we see as a profitable exit. So these are some of the industries that we invest in. As you can see, it is quite a wide breadth of entities that we invest in. And one of the things of being with an angel network is actually leveraging off the expertise that is in the room. So the Melbourne Angels, we hunt as a pack, but we all buy individually. So when you present to the angel networks, you've got to understand that ethos that's in the room, in that you're going to have, but before you, when you're doing a pitch, you're going to have 40 to 50 individuals that you're trying to sell your company to. So we're a lot different from a venture capital fund because they're basically a fund manager. They've received they've got a pool of money that they've got to invest via certain criteria. But with the angel network, you're actually investing with each individuals in the room. And the one thing I do highlight to a lot of companies that are looking for seed investment, it's not just about the money. It's also about the mentoring, the guidance, and the expertise that's in the room. So with an angel network, when you come before us, we'll get a seat on the board, and we want to make sure that the individual that we put on the board, who's the representative of the angel network, is very complementary to your skill set, because as I keep highlighting, it's all about creating that win-win situation to make sure that the company succeeds, and we can provide all the resourcing, and we've got a pool of expertise within the angel network that can help you. So if you're dealing with an offshore export program, we've got somebody in the room that has probably managed and run a company in that area. So we can pull those expertise in and out, because it's all about making sure that that you win. These are just some of our portfolios that we can actually show you who we're invested in, and the ones that are burning are doing really well. And as you can see, Mental Loop is in there. I think I spoke to somebody about
Yep, we spoke about Mental Loop.
So yes, we're investors in Mental Loop, but these gives you some of the exit and some of the companies that we've invested in follow-on rounds as well. So it's not tapping us the first time. A lot of these companies have come back to us 2 or 3 times looking for funding.
Andrew,
Sorry, I'll go back.
the previous slide, I haven't seen any fintech companies that you have invested. Does it mean that you don't invest in fintechs?
Probably a good question. With fintech,
So if you got one slide back,
yeah.
so I haven't seen any fintech word in there.
Well, fintech is you know, financial technology is a silo within, you know, banking and wealth management. So so from that perspective, yeah, I haven't got any investments in fintech, but I do know that we do have spoken to a couple of fintech companies.
It says finance there, so
yeah.
it's, I suppose.
So finance could be so finance technology. You've got other home loan companies and as well. So
Fintech is
it's very broad.
new thing.
Yeah, and I suppose the big thing that's coming up within fintech is open source banking.
Yeah.
So open banking is
Yeah.
the big thing.
Yeah.
My question around open banking is I have not seen an investment memorandum that clearly differentiates how they're going to address open banking from the big ADIs in Australia.
It's quite big in Europe.
It is, it's huge in Europe, but Europe has a very fragmented banking system. It's like the US. Where in Australia we have 4 dominant ADIs, and they control, you know, 85% of the market.
I think the only one that's actually making any traction in Australia that has any credibility is the one that's backed by Bendigo and Adelaide Bank anyway. So.
Yeah, and that's up banking. So
There's
yeah,
another
up
one
banking.
coming, and there's another one coming up as well.
There's
Yeah,
about
so
4 of them in the market at the moment.
Yeah, and again, please, I go through the prospectus with a fine-combed globe. I'm more financial, so I do due diligence very much on financials, and I do asset tests on the financials. But when I look at the companies, there's no clear communication on what differentiates them from the current ADI. So I bank with a large ADI, and it does every single thing that I require it to do. And I'm looking at these other neobanks that are coming out to the marketplace, and I'm personally struggling to understand why would I go with you to start off with, and what differentiates you from the other ADIs. You know, and you were talking previously about that straight through processing, but I can send you money through my IDs that I've got through my ADI, and I can get it through to you, you know, instantaneously. So again, you know,
we don't consider it as a bank because we don't have the same license.
yeah. But yours is in the Africa area, is that
No,
right?
no, we are not in African areas. We started with African countries.
Right.
Because mainly in the remittance world, most of the time money sent to Africa,
Yes.
Southeast Asia, particularly India, China, Philippines, and Indonesia. But our vision is to be a global.
Yeah, a global player.
Yeah.
Yeah. And I mean, the payment gateways, well, sorry, payment gateways is not the right term, but the transferring of money at the moment, yeah, exactly right. Yeah. So yeah, I mean, as I said, these are, and there's obviously also, so in biotech, you know, there's biotech, there's medtech, and there's sports tech now, and I'm doing a lot of work in the mishmash between sports tech and medtech. You know, I'm working with a lot of companies that are in that sensor technology. So do you classify them as a med tech, or do you classify them as a sports tech? So please come and join us. So yes, these are some of what we've got going on. So as I've highlighted, we really align ourselves with founders. We're proactively involved with the company, so when we're proactively involved, we have a seat on the board, and we're very instrumental in helping guide the organisation to express. You're dealing with experienced people and entrepreneurs within the angel network. Why not angels? Because if you don't want to partner, you just want to do it yourself. And also angel networks for you if it's a lifestyle situation. So if you start out a company and you see yourself in 10 years sitting on the beach sucking pina coladas, still owning the company, probably the angels are not the best thing for you to talk to, because we want an exit. That's where we make our money, is when, so if you have any investors or high net worth that say to you, we're not interested in exit, I would kind of challenge that, because how is that investor making money? And you only make your money on whether it's a trade sale or whether it's an IPO, etc. So I'd really challenge that. I've had a number of companies come and talk to me about, well, I'm speaking to this high net worth and they get angry when we're talking about exit. And my question to them is, well, you should always be talking about exit, because this is where you want to exit and make your money, and this is where we want to exit and make our money.
What does an exit involve? I mean, I'm guessing it would one be you as an investor selling your shares, be an exit for you, or be
Correct.
the company selling all of its shares to another company?
Yeah, so an exit can be somebody's come in and acquired a large parcel of shares, so it's gone out, it needs to gain access to the shareholding within the entity, so therefore it needs people to sell shares to buy shares, so that could be a potential exit sale there, or you can exit when venture capitalists come in as well.
Could the company buy back the shares?
Oh yeah, absolutely. Yeah. Yeah, but for me, it's looking at the net present value of my money, and I want an exit, in 5 to 7 years. I want to make a minimum of 10 times return on my money, because I'm investing in you at that higher risk area. I'm not a venture capitalist, because venture capitalists will still invest more around when you've actually got traction, you've got numbers, you've got clients, paying clients. You just need more money to scale up. So we're there really to help you with the initial financing of it. So I suppose the key thing that we want to highlight here is the investment goal. So we write check from a couple of $100,000 up to 700,000 is kind of where we write checks. The rule of thumb, and it's only a rule of thumb, is that it's 500K for 20% of equity on a valuation of 2 million. Okay, so that's the standard rule of thumb. A lot of companies we invest in have a lower valuation. Some companies we invest in have a higher valuation. I must also highlight that you just don't tap the angels once. So a number of the names that you've seen displayed previously have tapped the angel network more than on one occasion. So they always come back to us because we don't want to dilute our shares. So when we invest in a company, we've got to make sure that this is not just the first investment we're making, that there could be 2 or 3 other rounds that we go invest in that company. We want to preserve what we've got in there. Any other questions?
So for your exit strategy, is that negotiable?
Sorry?
For your exit strategy?
Everything's negotiable. Yeah, term sheets are negotiable, shareholders agreements are negotiable, everything's negotiable, but it's start to get the conversation going. So yeah, exit is negotiable as well. You just might want to buy out the shareholding, or you might just have a convertible note. That's another one that you must always keep in mind. Is you've got 2 options. You've got equity shareholding, where you acquire equity in a firm, or you can go a convertible note or a safe note. I'm not going to go any further into that. So this gives you an idea of what our investment process is. So what do we go through? So we've got kind of this is actually a pre-screening area. So we use a platform called Gust, and what you do is you log on and you upload your documentation to the Gust network. And it's our pre-screening. So what we want to make sure is you've got your business plan and you've got your financials. So kind of high-level financials and what your projections are going to be. So what have you currently done? What are the projections? So they're the key documents that you've got. If you're ESIC compliant, does everybody know what ESIC is?
No, can you explain?
Okay, so ESIC a couple of years ago was brought in by the Turnbull government, and it's called an early stage innovation company. I call them investment companies, but the real term is ESIC, early stage innovation company. So go to the ATO website and type in early stage innovation company, and that will tell you all about it. What ESIC is designed for giving a tax relief to investors that invest in early stage companies. So it's a 20% tax offset to investors to invest in your company on new shares. So there's key criteria that you must meet to define what early stage is, and you can talk to your accountant about that or have a look on the ATO website. And there's 2 other factors that you must meet. It's either a points test or a principles test. It's one or the other. to determine whether you're EC compliant, and then what you can do is promote your business when you're looking out for getting investment that you're actually an EC compliant company. And the benefit to an investor in that company is that tax, the 20% tax offset, and also capital gains tax relief as well. So, so the pre-screening is kind of a quarantined area where we make sure that the company has uploaded the correct documentation, and then it goes through to our screening pitch or our screening committee. And what the screening committee does is it looks at the company to determine whether you fit in our sweet spot. And again, I've talked to you about what we kind of look at. Usually the first question that comes out from the screening committee is valuations. We ask you what the valuation of the company you believe it is, and we need you to substantiate it. We don't need you to do this and guess, and you've looked at companies in the US. We just need to get a really understanding of how did you come to that valuation, because usually that's the first question that we ask. We go back to companies to talk to, saying, well, you come out with a ridiculous valuation. How do you justify that? How do you prove to us you believe the valuation is correct? That's usually the first point of call that we come back to clients with, opposed from not having the correct documentation uploaded. So correct documentation uploaded, then it's discussion about the valuation. Then what happens is that screening team, and I must highlight that we've only got one paid employee within the Melbourne Angels. Everything it's all volunteer. What we're trying to do is we're trying to bring this down to 100 days. So our goal is to, from when you start to engage with the Angels to actually being successful, we're trying to bring that down to 100 days. So we put on all new processes and procedures to bring that down. So the screening committee will go through the current deals that are disclosed on GUS, and then it'll make a determinant of whether it goes through to the pitch. So as I displayed previously, we have a minimum one pitch and deal pitch per month, and we try to slot you into that. The hold up could be you not coming back to us with the correct documentation, or you might be too ready, or you've got other avenues going on. Most companies that talk to Angels have other irons in the fire, and they've got to manage that. So the key thing that you must note when you are looking for seed funding is it's a long time. Okay, I've never heard, and again we do a lot of co-investment with other angel groups, but if you think you're going to get your money in a month, I don't think that's realistic. Usually it takes probably 3 to 6 months for you to get seed funding. So you've got to be realistic about it. Then we can engage with the term sheet, and that's all in negotiation. We've got a basic term sheet, and then we negotiate that with you. Then you come back and you do an investment pitch, which is coming in and doing the deal pitch, answering the questions that came out of the screening pitch. Then there's an evaluation. Then we do our due diligence on basic, talking to your customers. So if you've got customers, we'll actually reach out and talk to them. We'll stress test the financials, so doing asset tests on the financials. We'll look at the markets that you're playing in, look at your financially, looking at intellectual property, which is an area that I play heavily on, so I do a lot of due diligence on intellectual property, whether you've got a patent or not. And if you don't have a patent, I use what we call a proxy patent, which is the closest patent to your smarts. Then we invest, then we manage the investment, and then there's that exit further down the line, and this just gives you an idea of what the timeline is. So as again, we're trying to really get this down to, a minimum of 100 days is our goal. So it's setting up the right processes and procedures to get that right.
I've got a question. In the screening, you said you will re-upload a business plan.
Correct.
And your financials, right?
Yes, so what you've done and what your projection. So where have you been and what's your projection going forward?
Let me ask you a question. So if you are 7 months startup company,
yes.
So you already did your business evaluations, business plan.
Yes.
And you're already in the market, getting attraction, getting customers.
Fantastic.
But you still need to upload a business plan?
Yes. Yeah. So a business plan is a dynamic document.
Yeah,
a business plan is not
approved
static.
You already approved your concept.
Yeah, but again, we need to make sure that the business plan, because the business plan is a plan of where you're going.
Yeah.
Okay, so it's got to be a dynamic. I mean, it can't be stagnant. We don't need an investment memorandum. We just need an understanding of your business plan, where your segments are, how you're trying to position yourself to the marketplace. So segment positioning, targeting, and really the key thing for us is really who are your customers, and do you really understand the pain points of your customers? That's the hardest thing for clients to really get their head around, is who their client actually is and what is the solution that they're providing to that client. You know, if you look at Uber, you know, Uber came to arise because of people's frustration with taxis. You know, not getting a taxi, ring up, ordering a taxi, not getting it, and also the payment system. You jump in a taxi and then you've got to pay with your credit card, and usually the network's down, cab charge is down, and you've got to swipe your card in their little manual. So a lot of Uber success has come out of, you know, frustrations of people dealing with the current system that's in place. And your business plan will communicate that. And again, it's really focusing on, because a lot of the angels will focus on who are your customers. You know, there's a couple of key angels that are there religiously every month, and they will always fire to you. Do you really understand who your client is? Ken?
Second.
Sorry.
Just a bit more on, the key thing about, Andrew said, you know, business plan is about your projection and those sorts of things. It's actually about how you think you're going to execute on the opportunity.
Exactly
You define
right.
what the opportunity is sitting there, and how you think you're going to execute on it. Alright? It's that, and to be honest, that's what the money goes towards. It doesn't. The money goes towards being able to execute on the opportunity. Alright? And what these guys are trying to do is to understand, does your plan match up with the opportunity and the amount of funds to get to a point where you can say, yep, this looks like it's going to happen.
And we are very lucky because we've got Ken in the room, and Ken used to be with Deakin University, and he worked in the commercialisation side, so spinning out the research companies within Deakin University and spinning them out. So to have somebody of his calibre in the room is actually, we're very lucky.
Second question.
What is your question?
Sorry, second.
So for tax incentives, if you have got R&D tax incentives,
I'll talk about that.
Okay.
Can I get you to hold that? So there's definitely questions. So again, these are some of the guides to entrepreneurial success. So again, you can read that. What I say to a lot of clients is they've got to have the obsession with their business. You know, they go to bed thinking about it, they wake up thinking about it. Because what we want to do is work with entrepreneurs and founders, because there's going to be many more troughs than there's going to be peaks. And you're going to make sure that you're a support mechanism there, so when things are down, you're there to help them. You're there to help them, provide guidance, thinking, because we all know that product, services, devices pivot to the customer demand. So and people, I was talking to somebody previously about ICT and patents. You know, patent technology, why a lot of software and patents aren't being developed is because software is so revolutionary. Software today is going to be completely different, or the platform or the algorithm is going to be completely different in 2 or 3 years' time, where a patent goes for 20 years. You know, since IP Australia got rid of innovation patents. So, you know, that's one thing that you must always bear in mind. So these are, you kind of probably all know these, so I won't harp on them. So seed investment just gives you an idea of where we play. So we're kind of in this area where you've tapped family, fools and friends. So you've gone out and you've got their money. You may have gone through an accelerator program and got up to 100K. Then we're kind of in this area here where we're, you know, 50 to 100 mil. And then you've got the other venture capital side to it. This is the landscape. I've stole a few of these slides from others out there. So for you to get the market, there's kind of 3 areas. So programs, accelerators, which a lot of the universities and that operate. High net worths, family office, angel groups and investment firms. We've talked about the investment process. Again, this is just furthering highlighting it. Again, just really focusing on you know what our process is again. This just gives you an idea of, this is kind of what we seek initially. So when we go into the pre-screening section, these are really the key company summary that we need populated, and that goes onto Gus. So so if you want to go through quickly, this is kind of the area that you need to populate this information. This is the information that we, at a minimum, need to provide out to the network.
Andrew, is Gus something people can go and have a look at on your website?
Yeah, it'll step you through there, and it'll ask you to fill out this documentation. But this just gives you an idea of what the key things that we need, and we need an understanding, what your funding is, how much have you raised thus far, how much capital are you seeking, what's your pre-money valuation? Again, that's a big sticking point, that there's a lot of negotiation. What's your current burn rate? What's the net burn rate? Again, this is high understanding of who the people are that have come together to put together this startup or this company, and what's the customer problem that you're trying to provide a solution to. I've just give you just a bit of a shot of what the deal pitch looks like. So these are templates that the Melbourne Angels go through and populate. I just wanted to give you an idea of, this is just one of our documents that we got on that's internal, just asking, really we need to understand and provide comments on deals that are coming before us. So this gives you an understanding of what our processes are. So cover the tools that we talked about previously. So business plan, I think we've exhausted. Pitch deck, really it's up to 5 slides, because we want you to talk to those slides. We don't want you to read off the slides. So it's very much about putting up your 5 slides, who you are, what's the problem, what's your solution, and why you. That's the big thing, is why you. Again, we talked about your customers, really understanding the target market that you're going after, understanding who your customer really is, and have you thought of other segments or niches that complement that. What's the company fit out there? Is your intellectual property protected? Do you have a patent? If you don't have a patent, what documentation do you have internally to stop that intangible asset being taken by your employees? I don't know if anybody read the recent startup newsletter that went out. There was a great case study in there about a software company that was getting software cut offshore in the Philippines, and lo and behold, one of the employees actually took the intellectual property, the code that they had built internally on their platform, and actually used it for a pitched event, and they won the pitch event. But that intellectual property was now out in the marketplace. So I would advise you to have anybody in the software area to really understand intangible assets, and really understand what they have and the value within your business. Who your competitors are. Do you have a shareholders agreement in there? So if you've got 2 shareholders, do you have a shareholders agreement in place? And more importantly, is there a buy-sell arrangement in there? So if one of the founders gets hit by a car or is in a situation, what buy-sell agreement do you have in place if that individual is taken out, as so to speak. Easy compliant, we've talked a little bit about. The R&D tax program. So as you're probably aware, the R&D tax program has been operating in Australia since 1985. Under the Rudd government, it changed. So in 2011, it went from a tax concession to a tax incentive. There's a lot of attention being drawn at the moment under the R&D tax program, and rightly so. Within the ICT area, one of the biggest challenges ICT claimants have to deal with is open source coding. So a lot of software companies are claiming open source coding when they submit their R&D application. And Oz Industry is saying, but hold on, open source coding is freely available out in the marketplace. Why are you claiming it? So if you're just claiming the small algorithm that you've built on open source coding, so be it. But a lot of companies, unfortunately, are claiming activities or projects that aren't eligible. So if you're building a website, that's not eligible. It's all about what new knowledge the company is acquiring that's not freely available out in the marketplace.
What do you mean by do not pay percentage?
Oh, look, and this is my bugbear, and if anybody looks at my LinkedIn profile, they'll see there's a lot of stuff in there. The R&D tax program is an entitlement. You're either eligible for it or you're not. It's that black and white. It's not a grant. So with a grant, you are applying. You're applying for a funding pool against a number of applicants. Okay, so and the funding pool is limited. So we've got $50 million, and this is the scope of the fund, and apply for it. The R&D tax program is not a grant. A lot of more the accounting firms push it as a grant because there's a success fee attached to it. With the R&D tax program, it's an entitlement, and also there's no new money being brought into your business. All you're doing is clawing back what you've incurred throughout the financial year at 43.5 cents in the dollar.
Do you get tax incentives for your investors for getting R&D?
No. So R&D tax is a benefit to the claimant. The claimant has to be an incorporated entity in Australia. Okay, so the benefit goes to Australia. So if your company group turnover is less than $20 million, the benefit for you is 16 cents in the dollar. Okay, so if you're a tax-paying entity, there's 16 cents on eligible expenditure that you get off your tax bill. But if you're not a tax-paying entity and you're pre-revenue and your expenditure exceeds your income, you can also cash out the corporate tax rate at 27.5 cents in the dollar. And the ATO and the government has worked out that if it gives money back to claimants, they're going to do something with it. They're going to bring on, a full-time employee, or they're going to do other contracting because they want to get their product out as quickly to market as quickly as possible. So if they give them more money, they can do that. Unfortunately, this is created, and it's mainly been driven by the large accounting firms. They've been putting, some of them have been, like there's one large accounting firm, top four, a big four, who tries to, and this is if you're unsophisticated, they'll try to get 30% of your rebate check. Now when you cash out your losses, the accounting firm is not doing anything for that. That's a benefit of the program. It's not a benefit to the accounting firm. So if they were charging you 30% on the 16 cents in the dollar, that's fine because that's what they're doing work on. But for them to rudely want to acquire 30% of your rebate check is just robbery, absolute robbery. And that's why I say you should not pay a percentage or a success fee on your R&D tax claim. Okay, it's just robbery. If a service provider cannot give you a fixed fee within 15 minutes of meeting the technical people and the owner, run. I mean, they should be able to give it because it's compliance. You do it each financial year, and what they're doing is time materials based, because what they're doing is they're meeting with the technical people, they're looking at the projects, they're saying, hey, these are the candidate projects, this is what you can claim, and these are the nexus between the costs you've incurred against the activities that you claim. Okay, so for them to, and again, this is a bugbear of mine, it's this percentage fee that companies, and when I say percentage, I know I'm rattling on, but there's two models out there as percentage. One is, well, I'm going to take a percentage of your rebate check, so the government's going to send you a check for 100K. I want 30% of that because I'm putting together your claim. You wear all the risk, bear in mind, the service provider won't wear any of that risk. The other model is you've spent $100,000 on eligible R&D expenditure. I'm going to charge you between 2.5% and 3.5% of that. And how ludicrous is that? Because you and Ken could be doing pretty well the same project. You're kind of in the same area, you're competitors, but Ken has access to a high net worth individual, he's his uncle, and his uncle said, look mate, I'm going to give you, 500K. So Ken's got 500K, you've got 100K, so his speed to market is going to be a lot quicker. But as a service provider, you both, it's going to be the same amount of time and effort to put exactly the same claim together. So why should my fee be higher for Ken than it is for you? So there's that kind of stuff. And again,
it fits in the same bracket as filling out base statements and tax.
Yeah, exactly right. So you feel it. So the way the R&D tax program is, you submit your application. It's called a Section 27A, which is a registration application to AusIndustry. AusIndustry look at that and say, is your project define legislation? What's the new knowledge? What's the hypothesis? What are you coming up with? So what have you done? How have you done it? what's the outcome, what is the next steps.
Andrew, if I'm looking for R&D tax program advice,
Yes.
what should I be looking for?
So what you should be looking for R&D tax advice is, firstly, are they a registered tax agent? So that's the first question. There's a lot of spruikers out there who aren't registered tax agents. They'll put together your claim, they'll provide it back to you, and they'll get their accountant to lodge it on your behalf. So the person that's actually putting together your R&D tax claim should be a registered tax agent to start off with. And secondly, how long have they been in the industry? What is the technical expertise that an R&D tax individual has? Do they understand your business? Do they have clients? Because it's a big area at the moment, because the regulators, which is Oz Industry and the tax office, are cracking down on claimants. But what they're doing is they're going to the service providers, they're going to accounting firms, and they're, because if they've identified a problem with a certain claim, it's highly likely it's replicated through their all other claims. Now I can bore you to tears about the R&D tax program because I've been playing it since 2004, but don't pay success fees, ask for a fixed fee, and then you compare.
So what fees should we recruit for?
Well, it's all about time and materials. Yeah. So so the rough rule of thumb, and it's a rough rule of thumb. If you've got $300,000 of eligible expenditure, you've got a couple of projects, and you've got one site where the service provider needs to visit, you're going to be probably paying in the vicinity of maybe $5,000 to $6,000 for them to put that all together. $5,000 to $6,000 for them to put that all together. So that's meeting with your technical people, putting together the technical documentation to substantiate your claim, lodging it through the Oz Industry portal with their tax agent license on it, and then once you receive your registration number, then it becomes an ATO issue. So you're looking through the P&L, taking out the eligible costs out of the P&L. You're looking at PAYG summaries to say, well, I can claim X percent. If you've got timesheets, bonus. But if you don't have timesheets, you've got to apportion time, and that's the big challenge: is are you apportioning the right time? But again, sorry, I'm babbling on. There's another website called Fingerprints for Success. Fingerprint for Success is a tool that allows it allows founders and entrepreneurs to go on. It's only, I think it's $90 US, and you can go on and do a bit of a psychometric analysis to identify what are your strengths and weaknesses as a founder, and the weaknesses are obviously you're looking for a co-founder that fits these gaps that you have within your business. It's called Fingerprint for Success. Grants, you can go and have a look at the business.gov.au website. There's a heap of grants out there. There's over 700 federal, state and local grants that you can go and have a look through. And that's it. Thank you. Has that provided a lot of clarity? Questions?
Another question. What would you want to have in terms of traction, amount of customers? Like, what are some of the things you look at as an angel investor to help you decide whether or not you're going to invest in that opportunity, or is there not really
It's an ad hoc approach to entities. So we'll get a company that will come to us, look for funding, and they're at concept stage. So they don't have any customers, but they've got this great plan, they've got this great idea, they need money, and they might have have access to family, fools and friends. So they need money to help bring that smart to MVP. So that's a different approach. Our preferred investment methodology is around companies that are at MVP or nearly at that minimum viable product stage, because even though it might be at its rough and tumble stage, you need further money to streamline it. If you've got some memorandums of understanding from clients that say, hey, look, or even a client that's become a stakeholder in the firm to say, look, we really like this stuff, and we've got this memorandum of understanding, but we're also an active stakeholder that's involved on them tailoring the solution to that client's needs. Obviously, the big challenge there is that you may marry yourself up to one client, but it may cut you out from other clients as well. So if you've you know, really for us, it's more if you've got contracts already established with customers and you're looking for money because you want to jettison into the US or the UK or Europe. I don't know about Brexit at the moment, that might be an issue, but you know, if you want to go into the US and you're just looking for money, yeah, that's another big issue. But you know, it's really horses for courses. It's looking at each individual company and really trying to understand. Really, it gets back to the business plan. Really, what are their projections? Where are they going? And you can sit down with some angels and they can say, "Have you ever thought of maybe this approach? Is there something different that you've thought of doing?"
Let's say you've gone through the initial screening process and for you as an angel, you're doing your due diligence. What would scare you, I guess?
Lies. Companies that lie to us, that's the biggest concern. We've had a few companies that come before us and they haven't really been honest with the truth. And we go to quite strict elements to come up with an understanding. We reach out, so we'll approach technical expertise in their area. We've had a couple of deals that come before us where it's just gone completely over our heads, so we've had to engage individuals out in the marketplace to say, well, we don't really understand this because can you tell us about it? Can you actually interpret? And then it's a conversation between the individual and, you know, kind of our advisor, and they'll come back to us and kind of crystallize it for us. So, I mean, lies are the biggest issue. They haven't been really honest with what they're disclosing out to the marketplace. I suppose another big issue is the documentation is not right. It's just, you know, they've got no idea. The biggest concern with and you've got to understand you're dealing with individuals here as well, because even though we hunt as a pack and we buy individually, there's certain individuals within the group who focus on, you know, customers, really understanding who your customer is and have you surveyed that customer, have you really understood that customer to finalise that. Yeah, and that's the biggest concern is, you know, do you know your customers?
Thanks, Andrew. I'll just conclude and stop the video and you can ask questions later. For those of you who don't know me, I'm Atula Govind, the lead organizer of Melbourne Silicon Beach, and you can watch this whole thing again on YouTube. We have our Silicon Beach TV YouTube channel, so you go to YouTube and search for Silicon Beach TV, you'll find that. Thank you for watching, all those people on YouTube as well. We get hundreds of viewers, so thank you so much for very informative lunch and learn session, and thanks to Nita and Wendy and the team here at Box Hill Victory Offices. I'll put the links to Victory Offices on the YouTube description so people can come and check it out. And if any of you have an idea for a lunch and learn session, please talk to me. We are looking for presenters to empower our founders. Silicon Beach mission is to empower founders, and our big, hairy, audacious goal is to make Australia the second largest startup nation in the world, just under US. At the moment, we are number 5. There's US, UK, Canada, and Israel above us, but there's no reason why we can't be number 2. When we get to number 2, we'll think about number 1. Thanks for coming. Thank you.